So what's good, everybody on the recording? We're live today with Go Live Educator Cedric Bierbaum. Today we'll be sharing some great values. So Cedric,
yes,
stage is yours.
All right, perfect. So first of all, welcome you to the session, guys. I hope you're doing great. And we're talking today about the trading psychology masterclass. It was a session I did in German, I think some months ago, and it is also one essential session for my plugin. When I do the Forex plugin, I have like 8 sessions that the people need to watch, and the trading psychology masterclass is one of the sessions they need to watch, or it's the first session they're going to watch, because once you're aware of your emotions, once you're aware of everything else, your trading success is much easier. The first thing I want to give out to you guys is amateurs try to remember important information and professionals write them down. So just prepare yourself with a piece of paper, also with a pen, and then I think we can start off. So when you're talking about trading psychology or the success in trading in general, we have to notice one thing. Strategy is only 20% of your success in trading. So what's the most important thing in trading right now? It's like the risk and money management and your psychology. This is like 80% of your success in trading. Once you get this thing together, it's like everything becomes much easier, because here in the IM Academy, you have so many strategies. We have harmonics, we have vibrator, we have swipe coin and all of that stuff, but it's like only 20% of your success, because trading begins with you and ends with you. And that's one of the most important things I noticed in the past 7 years. I'm doing trading right now, and so you should be aware of it. And we need to be aware also about our types of emotions, because we need to know ourselves better, because once you start to begin with trading, it's like you're living like you're going through every emotion, and you need to be aware of the emotions that you normally have. And normally we have like happiness, we have sadness, we have anger, we have fear, we have also like shame. Yeah, not shame. So it's shame, but I think it's a writing mistake right over there. And we have to also think about one point, that every emotion can increase to a certain point. So, for example, when we take the emotion of anger, you can be annoyed, but you also can be aggressive. Both emotions are from anger. Yeah, they both come from anger. Sometimes you're annoyed about somebody, but sometimes you're really aggressive. So every emotion can increase to a certain point, and you need to be aware of it. It's also like when you're like sad, you're like maybe, okay, sad. It's like it was a bad day, but you also can be depressed. That's, for example, the increase of sadness. And the more intense the emotion, the more it's likely that it takes over your action. So we have to think about it. So once you have an emotion, once you recognize that you're an emotion, we need also one thing, that once the emotion becomes even stronger, it can take over our actions. For example, I don't like to be very happy or very sad, because it's like when you're in trading, you don't have to be very happy or very sad, because you have to be in a neutral point in trading, because you shouldn't allow your emotions to guide you through your own trading, you know. And the next thing is like, why do we even act emotional? So it's like a part of our body, because we have this limbic system. The limbic system is like programmed for fight or flight, you know. And the first thing, once you get, for example, an emotion or something happens, even good or bad, the first thing or the first reaction will always be an emotional reaction, because first of all, you feel something, it goes through your limbic system, but afterwards it goes to your forehead, or to the forehead part of the brain, and then it's becoming rationally. So it takes a little bit of time. For example, maybe you notice this once for yourself, when you were for example, driving. It's like somebody's like, it's like they're like doing the horn, like hoop, you know what I mean? And you're like, man, what the fuck is he doing right now? But in the end, it's like, okay, leave it, you know. And the thing is like, always is like the first reaction to an event is always an emotional reaction, no matter if it's positive or negative. And one thing I learned about trading psychology is like, the first thing, or the first step to learn trading psychology is to open up a real account, because when you want to feel real emotions, you have to be on a real account, because when you're trading like demo money, it's like demo emotions. Yeah, it's the same like for Monopoly. Everyone is like, here I can spend like 10K for a house here and something like this, but everything that's happening in the real life will also give you the real results. So first of all, we have some basics we will go over through in the first thing. So we need to think about our inner and outer balance. So our inner balance equals our outer balance. So what does it mean? So for example, if you're like stressed out from somebody stressing you, or you had like a bad day, it's like also affecting your inner balance, because people from the outside can affect yourself, but also you can affect yourself. So you have to be aware that this should be equal, your inner and outer balance. And once you start trading, you should be aware that inner and outer balance should be equal to each other. All right. The next point is like negative thoughts will give you negative trades. So be aware of it, and also think about your thoughts, because it's like Bob Proctor said, once you have, for example, a thought in your mind, and through constant spaced repetition, it can become reality. So it's like when you have negative thoughts, negative day, all of that stuff, all of a sudden, it's like giving you negative traits. So, and we also have to think about another thing. It's like there's also a world beside of trading. So we need to know that the real world is also there. So trading isn't everything. Trading is just one part where we make our money. It's just one part where we can get to our freedom. But we need to know that there's also the other world with our friends, with our team partners, with leaders, and all of the other kind of persons that we're dealing with every day. And the focus is one of the, it's one of the main part of the trading psychology, because focus is like an abbreviation for follow one course until successful, you know? And who acts emotional loses, and emotion will cost you your trading account. So this is it. So you have to be aware of it. I'm saying it over and over again, but it's like, it's really important that you're aware of your own emotions, because in the end, when you're emotional in trading, it will cost you your account. So it's like it will directly affect your trading account once you are emotional. And the next point is like, what types of emotions do we discover as a trader? So the first emotion we discover as a trader once we make maybe our first profits is like greed. Greed is the most dangerous emotion in trading. So because if you're greedy, you won't be neutral in the markets. Greed is really, really, really dangerous. And once you're greedy, you will distort the risk and money management and your system, because you're like focusing on the money and not on the strategy or on the craft. Because I said in the last session we had together, trading is a craft, and you have to master this craft. You have to master the skill set. It's not about the money, because like people are always on a point where they're like, okay, I want money as I can. So like, I want to be a millionaire the next 90 days. And they're like, okay, they are focusing on the money, but they're not focusing on learning. But once you're focusing on the learning part and make it even bigger, then you have the possibility that the results can come faster and success will come. But it will depends on you, how much you will learn and how you deal with all of the emotions. I'm just like, I will tell you everything, because trading, you have to see it as a process. Yes, because when I started out with trading when I was 14, right now I'm 21 years old. And when I started out with trading at the age of 14 years, I was like, okay, I just saw it as a process, because I was a beginner at this point. And we need to know one thing. For example, if you have a look at the doctor, a doctor went to university, learned everything, years after year, a lot of years. And people are like, okay, they're going to university for 3 years, but they want to be successful in trading in like 1 month. It doesn't make sense to me. So you have to see it as a process, because it's not who you are today, it's the person that you're becoming. It's like I am. It's like the slogan of I am. And we need to also think about when we want to avoid greed, it's really important that we take the pressure out, because most people that are greedy are like pressuring themselves. They want to make money, they want to be successful, they want to have this, they want to have that. But you'd have to take the pressure out, because you're a trader. You're not dependent on the market. You trade because you want to have the freedom. So don't pressure yourself. Every person has its own lane. So don't look on the other lane or on the lane on the left or on the right. Focus on your own lane. Focus on your own process. Because it's like, I think you heard of the compound effect. It's like 1% a day isn't much, but if you play this game for like 3 to 4 years to 5 years, it's pretty crazy what can happen. And the next thing is like, wait a second. The next thing is temptation. And you know you want it, but you know it's wrong. You know, I think everyone had this feeling maybe in his trading career, because you're like, okay, you're like tempted to go in the market. For example, Bitcoin is like going up again, up. And you're like, okay, I want to pull the trigger right now. I want to do the trade of my life. So, and people are like, they get tempted by the markets themselves, and they want to go into the big position and make the deal of their lives. But once you're in temptation, you need to know one thing. You have to build up the discipline. Discipline is one crucial part in trading. It's so essential that you build up your own discipline. You have to resist now, because then you can shine later. Because you have to resist the temptation. You have to resist every good market opportunity, because people are like, they want to catch every trade in every situation. They want to like, okay, I want to catch like 20,000 pips. So for me and myself, I had some 20,000 pip trades last year, but I know I will catch them in the near future, but I'm not looking out for the biggest movements or something like that. I want to stick to my strategy, because I know one thing, that the short-term good is often the long-term bad. Also in trading, the short-term good is also the long-term bad. For example, going out and drinking with your buddies tonight, every weekend is maybe for the short term is really good for you, because you feel it, okay, it's right, it's cool, getting drunk, you know, but it's long-term bad for your health. It's long-term bad for your wealth, for your discipline in general. So you have to think about it, that you have to resist right now if you have the opportunities. It's like sacrificing. You can compare it like to sacrificing. And before you do something, always ask yourself, what would your mentor do? Because every one of us has a mentor. Maybe you also have a mentor. For example, maybe many key owners. Ask yourself what your mentor would do in your situation you're right now, or you're in. And the next emotion is losses and fear. Fear is normal, but it's not permanent. So having fear in the market is normal in the beginning, but you will never lose. You have to keep it in mind. You will never lose. You will only learn. Every winning trade is a good trade, and every losing trade is an L, because you learn. And if you don't learn something from the trade, you have to rethink. You have to reevaluate everything, because every trade you lose is also a learning for you. And the acceptance of your losses will also give you your emotional balance back, because lots of people are like, maybe I lost this account, I lost this trade. It's like the same for like in the business. For example, somebody quits your business and they're like, oh man, this people, but you have to accept it, because you can't make it back. You won't make the loss back. So accept it, be okay with it. Because a lot of people are like, okay, they're like, man, I just had this loss and it was like awful and it was like this, but you have to accept it. And the best thing you can get acceptance is like track your trades, so you can identify and eliminate your mistakes, because the vast majority of the people are not tracking everything. So for example, in my case, I'm like tracking everything from my sleep to my meals, to my workout, to my trading, to my business. I'm tracking everything. So I need to know where I can adjust, and I know also where my mistakes are, so I can eliminate them and make it even better. So, and traders are like whipped cream. So it's a sentence from one of my mentors. Traders are like whipped cream. The longer you beat them, the better they get. So it's one thing you need to know, because a lot of traders that are really successful in the markets, they're like trading 6 to 7 figure accounts. They're like really like whipped cream. So they got the longer you beat the trader, the better they get. I think it's you can understand it. And the next thing we are going over is like failure. For example, when you crash your account, I think maybe you You had it some time ago that you crashed your account, or maybe recently, so it's okay. So, but it happened. You can't turn back the time. So be aware of it. When you crash your account, it happened, but you can't turn back the time. So, but here is also one thing, that acceptance is needed, because acceptance is also a really good point, a really good term in trading. So accept everything you're going through, because everything has a reason. But one question you need to ask yourself is like, when you're crashing your account, it's like it doesn't have, so if you're trading on with a strategy, if you're trading with the rules, it won't happen. So ask yourself one thing, and that was the first thing I just asked myself when I first crashed my account. So a little story to this point, I was like, I think I hope the compliance will not see it, but when I started out trading in the year 2015, I started out with like an account of $400. I traded up to $2,000 and I lost it on the same day. And the question that I asked myself after it is like, okay, I know that trading works. Trading works, obviously. But do you want to learn, or do you want to continue to play gambling? Do you want to gamble, or do you want to learn? Then after it, you have to go into a finding phase, because the people that are crashing their accounts are like, okay, they're like doing a donation to their broker every day, every week, once they crash their account, but go to a finding phase, not directly without thinking again to charge money on your broker account. So just like thinking about everything, why it happened, and what the mistake could be. So reflect yourself and your actions in trading, because this will help you to go over, to get over it, and also to have the mindset to get even further. And the next emotion is like triumph. Triumph is a positive emotion, but it shouldn't be overhanded. And once you have this this kind of emotion, enjoy it. If you did something right, but don't rest on it. Because a lot of people are like having a winning streak and they're like, oh man, I'm the best trader and something like that. But don't rest on it. It's normal that you make money in the markets. It's normal that you're a successful trader at some point. But don't rest on it, because there's always something to learn. So, because anyone who rests on the position of triumph will fall back to old patterns faster. Because we need to know one thing: success is a rent, and that is due daily. So we have to pay this rent every day again. So we are every day back at zero. When you have a winning trade like yesterday, everything today won't be the same. So you're back at zero today. Today is a new day. Even if you have a lost day, today is a new day. The next trade is always your best trade. And after the triumph, there's also one emotion, and this emotion is also essential when you want to understand how trading psychology works, because this is ego. Ego is the killer for everything, for relationships, for business, also for your own success. And we have two ways of ego, one positive and one negative. The positive ego is like the trust in you and your strategy. So, okay, you trust yourself that you will do it, that you will make it, and you trust the strategy that it will work. And the negative side of ego is like, I'm the best trader, I can do anything alone, blah, blah, blah. The next supercar also comes or so. You know what I mean? They're like people, they're doing their trades and they're like, oh man, next week I will buy my Lambo. I was one of the persons too. I was like sitting down, I was in a Gucci store with my friends, 2015, back in the days. And I said to my friend, man, in 2 weeks, I'm going to buy this certain watch. You know what I mean? And I was like, okay, I was blowing my account up to that after I got home. And then I was like, okay, back to reality. So, but one thing, it's also really important when you want to avoid ego, it's like always be coachable. You're always a student, always. I can also say to myself, after 7 years of trading, I'm learning every day. There are new things to learn and discover every day. Really, every day, in every aspect of your life, you will learn something new. And also after 7 years, for example, I was into the markets for over 10,000 hours. But I noticed one thing. There's always something to learn. That's the reason I'm also a Go Live educator, but I'm also attending Go Live sessions and learning new things every day, because I know I have to feed my brain every day. I have to widen my horizon, so I can add value to the team. I can add value to myself, and I can get even further as a person. The next add-on is like patience. So patience, you know one thing, patience pays. Patience pays. So one sentence, patience pays. But we need to be aware of one thing. So trading consists of 10% buy, 10% sell, and 80% waiting. So that's patience. Because clicking on the buy or sell button is it's like the minor part of trading. It's like more the managing part where you end your trade. But it's also waiting for the right entry for the strategy, because I see people, they want to trade every day, they want to trade every move, but they're not waiting, they're not patient. And when you're not patient and you're not waiting, you will get emotional. So you have to be patient in trading, because there are a lot of good entries for your strategy every day. There will be good opportunities every day, but you have to be patient and you have to wait. So the next point is, we talked over some emotions, but right now what's important, we have to go over the problems, because when you think about a problem is always good for ourselves. But for example, when you face an emotion, when you discover a new emotion and you think, okay, it won't go off, you can't turn it off, you're always thinking about that. We have to get the problem at the root, okay? Because many emotions, and that's really important, so just listen right now. Many emotions arise from past events, okay? Much is like an anchor and must therefore be solved. The habit reversal cycle. So you have to think about like bad events in the past, because people are like living day to day, and they're not like thinking about their past or why something happened. For example, you lost a person and you didn't get over it. And then you maybe have like fear in the markets to lose a trade, because I talked to a team partner and she said to me, hey, Cedric, I'm like, I have fear to place a trade. And I said, why do you have a fear? And then I asked her, was there a certain event in your life that hit you emotionally? And then she said, okay, she lost the important person in her life from her family. And then we talked about everything. And I said to her, you have to let go everything. You have to let go to go up. You have to let go to go up. Because like people are like living in the past sometimes, and they want to see, or they can't accept the change, because we are all going through changes. You will also face some changes, but you have to be aware where you're right now and where you were, where you have been. And the question, whether you may have not processed an event, so you have to heal your inner child, because every one of us has an inner child. And the inner child is really important, because the inner child can be normal, can be happy, or can be also depressed. Because I see a lot of people like they are really depressed. They are like, for example, I can give you one example. A lot of males are like, man, I can get this woman. She looks so beautiful. I'm like a piece of shit. And this person was like going through failure a lot of time with women. And after it, he hasn't processed this event, and he's like in this paradigm. So you have to shift your paradigm, because everything can change once you think about it. For example, I was like 2 months ago, it was like 110 kilos at like 24% body fat. 2 months later, I'm like 95 kilos at 11% body fat. You know, everything can change once you think about it. So your current situation won't be your future situation, and also your past situation won't be your future situation. The next thing we're going over is like the 4 types of trades. The first thing is like, I want to go over is like in the graphic. So it's like why professional traders are process orientated, because we see there are people that are result orientated and also like process orientated. And we need to know that amateurs only focus on the outcome. So it's I lost, it's a bad trade. I won, it's a good trade. But that's not the psychology behind it. Results-oriented traders miss important learning opportunities, tend to impulsive trading, and do not have a long-term mindset because they want to see money as soon as possible. And the process-oriented trader are professionals that judge their trades by the way how they made their decision. For example, they had heard the rules. So when they got a winner, it's good, it's well done, it's okay. And a loser, it's no big deal because it happens. And if you broke the rules and you won the trade, winner, I was lucky. Loss, well, I deserve. You know what I mean? And then we have like the 4 types of trades. So we have the good winning trade. It's a trade when you adhere the rules, when you stick to your roots, when you stick to your strategy and had a winning trade, it's okay. Check, next trade. If you have a bad winning trade, it's like you just entered a trade without thinking about your strategy. Maybe the lot size was too high, but it's like, it's not good. It's not good. Then you have the good loss trade and the bad loss trade. The good loss trade is when you stick to your roots. The bad loss trade is when you don't stick to your roots because this is what you deserve. And people are like, sometimes they get paralyzed because they're like getting those good the bad winning trades. Because once you have a streak of bad winning trades, you're like thinking, okay, I can be the trader, and maybe you will get ego. But you have to be aware that the bad winning trades will also end up in crashing your account sometimes, because the people that are like, okay, I'm a good trader doing bad winning trades, and after they have some losing trades or some lost trades, they will blow up their accounts. So you need to be aware of those types of trades, and you also need to be aware that you stick to your roots. That's why you also should track your trades, because if you don't track your trades, you can't identify if it's a good trade or if it's a bad trade. Beside of the win or loss part, you always have to think about the thing: have I stick to the rules, yes or no? So, and after it, we go over to the success or the circle of success in trading. Circle of success in trading is like, it's like you can duplicate it to your team because it's really simple. So the first thing we're going to watch, every one of us, is the academy. That's the base of everything. Afterwards, we are going to open a demo account on the MetaTrader 4. If you do a research for your broker, always do your own research for it. The next thing is like the Go Live basics. So you have like basic sessions from all of our educators. Also in the English space, we have a lot of basic sessions that are really good. For example, from many Kinonas, he's doing a great job in the academy. The next thing after you go over is like focusing on one strategy. So for example, you're going to your upline, to your sponsor, you're talking about the strategy. For example, you want to trade Gold Cup. But it's important that the strategy fits to you, because every strategy works. But the thing is, will you work with the strategy? Every strategy works, but will you work with the strategy? So you have to think about the point that every individual isn't equal. So when you want to select a good trading strategy, it's not the strategy that everyone is promoting right now. It's a strategy that fits to your day the best. For example, you're working in a 9-to-5 job, you only have like 1 hour time to trade. Then you maybe go with Vibrator for scalping. If you have like time to look into the charts every 1 hour, maybe you go with Harmonix Price Trap or with Swipecoin. Or you want to do some long-term positions, they're also there. For example, you can trade Steady. Steady is a high risk to reward ratio. The next thing we need to learn is about TradingView, because TradingView is really important when you want to analyze your trades. Soon it will be quick. It's our own TradingView, so we will get our own TradingView very soon. But TradingView right now is the thing we need to focus on. Afterwards, we're going to create a trading plan. The trading plan is based on the strategy that you selected and also based on everything. So you write down in the trading plan the normal win rate of the strategy, your normal CS, and your normal risk to reward ratio, and also like all the important rules that are for the strategy, and also like your times where you can trade, also where you can make up time for trading, and also for the education. So the trading plan is like the plan for everything, because if you fail to plan, you plan to fail. I already said it in the last session, the previous session. So, and after you follow it, you can start like the demo account, and if you feel quite comfortable or quite if you're comfortable with it and also feel confident in your trading, you can start with real money. So, and once you start with real money, we have two options. First option is like you're trading with your own capital. For example, you start up a trading account, you put like maybe the amount in that that's not important for you right now. For example, like $100 or $500, depends on yourself. And then you start with trading, and then you can also face the emotions that you maybe have. Then you also can like prepare for everything, and then you can like, if you feel more confident also with the real money trading and you make consistent results of it based on the strategy, you can put even more into your trading account. Or you're like, I think also Chris is duplicating it for you. You go with FTMO with prop trading. So you're like preparing yourself for the prop trading account, and afterwards you maybe like have the 50K account or 100K account. It depends on you how much money you want to trade. And the next thing I want to go over is the success curve in trading. The success curve in trading is really crucial because we have two lines. One is the expectation and one is the reality. So in the reality, it looks like a normal chart. You have ups, you have downs, you have ups, you have downs. But in overall, so it should be like an uptrend with higher high, higher low, higher high, higher low. So, but most of the traders, and that's more than 80% of the traders, stop after their first setback. So it's normal that you have a setback, because without setback, you cannot learn something new, because some people are like in the world, they have like their pink glasses on themselves and they're like, oh, it's like everything is going well, everything is going good. But it's the expectation, but the reality looks much different, because once you have like the setbacks, that are the phases where you're going to grow. And the next thing for the strategy, because I see a lot of people are like hopping from one strategy to another strategy to another strategy. Stick to one strategy, focus. I already said it. Focus is one of the main parts in your trading psychology. Follow one course until successful. So all the ways lead to Rome. All right. So for example, I just have draw a picture over there so you can see the map of Rome, and I just draw some lines. So for example, swipe coin, gold cup, harmonics, vibrator, some strategies like Popgun. It's like it was used in Germany, but I think you know what I want to give out to you guys. The next thing is like the Cedric strategy with price trap and then steady. So for example, if you're like following the one way to Rome, it's like I will draw it to you. All right. So you're like, okay, I'm like in swipe coin. You're like, okay, I'm going to swipe coin. But you will face some distractions. They're like some barricades on the road you have to face. And the people are like, oh, now there's gold cup. We made like 2,000 pips. Okay, let's go for gold cup a little bit further. But they said, it's like too slow. Okay, they go for harmonics right now. They're like trading harmonics. But oh man, so many patterns. And they saw vibrator. Vibrator is like 90% win rate. Let's go to vibrator. Let's trade vibrator. Okay, they're in the sessions. Okay. And I see, oh, now I just lost a session. I was like, oh, it doesn't work. I just lost 15% of my account. They go over to the next strategy, and then the next strategy, and the next strategy. And after it, you see one thing. They don't come closer to Rome. They're like in a circle. So you have to follow one course until successful, one course until your goal or until to Rome. All right. That's the most important thing. So when you have a strategy, stick to the strategy once you're successful, because the strategies are really simple to learn, but you have to adapt yourself to the strategy. You have to adapt everything to it. And once you get through it, you will reach your goal. It's Rome. But don't be that guy that's like hopping from one strategy to another strategy. That's not good. That's not good for the long-term success in trading, because people are always looking for the holy grail in trading, and there's no holy grail because every strategy works. But will you work is the question. 80% is risk and money management in your psychology. And that's why the most people fail in trading, because they're not aware of it. So, and what do we learn from it as a conclusion? You can't fail in trading. One second, let me just remove all the drawings. So what do we learn from it to conclude it? So You can't fail in trading. You can just give up too early. That's the most important thing. So in the past 7 years, I'm in the trading industry right now. I'm like working together for over 3 years with IM right now. And in the last 3 years, I learned more in trading than in the past 4 years. I did it on my own. And it was like, I started to be, I started to be coachable again, because I knew, okay, I'm not at that point where I want to be right now. So I have to shut up. If there's a person in the room that is making more money than you, sit down, take notes. I'm always the person that's like sitting in the rooms. I was also, I had just like a dinner with all the DCX educators, and I was like, okay, everyone was talking. Ivan was talking, Nick Gomez was talking, all the big guys. I was like, okay, just note, I was taking notes all the time, because they're even further than me. I also have some success in trading, but I don't want to compare myself to another one. And what's also really important is like, the thing is about comparing. Comparing in trading is also really bad, because the most people are like comparing their weaknesses to the strength of another person. And that's why they're getting frustrated, because you're starting to compare your weakness to the strength of another person. So we come back to the point that focus is also really important in trading. So for now, I'm just like, I'm like finished for it right now. So if you have some questions, you can also, feel free to ask them in the chat, so we can answer to the questions. So this will also be one of the parts I'm going to talk about in Barcelona, because we're also like having a trading education day where we will also go through a lot of things with like strategies and so on. And I'm just focusing on the main education, because I think the strategy is the one part, but getting to know yourself even better is the part that is even more important for your long-term success in trading, because everyone is not here for a season, everyone is here for a reason. All right, so if you have questions, just feel free.
Thanks for that part. That was great stuff. Yeah, guys, feel free to ask in the chat for sure. One thing that came up yesterday, me and Leander in the trading call, we tapped a little bit on the way you're trading. Do you want to show some of that price trap sauce, that harmonic trap sauce, for the last couple minutes, to give people a little insight on how they trade? Because everybody on this team started with the Manny Quinones bootcamp. Like, everybody started in trading with Manny Q's bootcamp, so everybody, you know, knows and loves Manny Q. So it would be great to see some of that price trap explanation of you, like just a short introduction or something, the way you use it.
Of course, yes, I can also give a short introduction to this strategy. So, all right. I have a question regarding volume when placing a trade on FTMO MetaTrader 4. Yes, go for it.
Yeah, so you know how with a regular broker account, you can just choose the amount of money that you want to use to trade and then the leverage. And then with the FTMO MetaTrader account, when we are placing a trade, you gotta choose the volume.
And the lot size, right?
Yeah. So well, my question is, if like I trade BTC, and let's say if I use 0.5 volume, that means 50 cents per pip, right?
Yes.
And then on a 100K account, I noticed that for that about 15K margin is used. And then if I'm using like 0.5 volume, it's like 50 cents per pip, but like it's got nothing related to the volume. Like I'm using 30x leverage, like the swing account. So I'm kind of confused with that, like the leverage part and then the pip part.
Yeah, so the pip part in FTMO is like a bit different than in normal brokers, because we have like brokers that are like, when you're trading with one lot, it's like $10 per pip. And when you trade like with a 0.5, it's like $5 per pip for the normal accounts. In FTMO, it's like a bit different. I can also give out the sizes for you, so that you're aware of it. So when you have the lot sizes for FTMO, man, why is it yellow, man? I just want to have it in. Yeah, perfect. Right, it's better. So for BTC, it's like for one lot, it's like $1 per pip. And if it's for one lot, it's like 10 cents per pip. And for XRP, for one lot, it's 1 cent per pip. So you keep it in mind. So because in FTMO, it's like when you're trading, I would recommend you that you don't risk more than 1% of your account per trade. So when you're trading like Bitcoin, just be aware of it, because for example, when we're like trading with the SwipeCoin trade ideas, it's really important that we keep in mind that we have like limits. Yeah, the daily limit is like it's 5% a day. And the overall limit is like 10%. So we have to keep it in mind. And so if you don't want to exceed those limits, it's really important that also when you're trading like crypto, stick to the 1% rule, 1% risk per trade. I think you can easily calculate it. For example, if you have like a 100K account, as an example, you have 100K account, you have like 500 pip stop loss, and you're like risking 1%. So 1% is like $1,000. And then it's like, okay, you have 500 pip SL with one lot is like $500. So you're like 500 pips. Yeah, then times the 2 lot equals the $1,000 as an example. Is it clear for you?
Yes, that was very helpful. I just have one more question. What I also noticed is, let's say on a 100K account, I use 0.5 volume, and then from the total margin of 100K, about 15K margin is used. So how is that calculated?
Yes, that's due to the leverage. So I'm not,
Okay.
when I'm like teaching trading, I don't go over through the leverage, because when you stick to the rules, you won't exceed your margin levels, because the margin is only the amount of the account that is blocked right now, but it is used to open the trade. So for example, because of the low leverage, it's like, okay, for the 0.5, right? It's like it's like the 15. Can you share that screen again? Yes, of course. I want to write it down. Of course, I will share it again.
Took a screenshot as well.
Yeah, of course, just do a screenshot. Feel free to do a screenshot, because I'm like doing those trainings on a day-to-day basis on my Go Live. So for example, if you're like in my German Go Live, like it's Cedric Bierbaum, you can go over through it. You also can take the screenshots, because I'm like doing those examples many times. So it's like self-explaining. I also do a lot of English stuff. So because like trading is like the language of trading is English and not German. So I'm like writing down a lot of stuff in English. Yeah, all right. Yeah, you're welcome, Matthew. Liana just said, but the spread on XRP is bad in FTMO. Yes, actually, it's even worse on the other broker. So I think FTMOs is a good way to trade like crypto. But also, yeah, sometimes you have to be aware of the spreads. Also, the spread hour is like really important, because when you have watched the many Kinonas bootcamp, there's like the spread hour that you have to avoid, because otherwise it's like yeah, it's like crazy. TBC and yeah, BTC and ETH, yes. Bitcoin, Ethereum, yeah, they're really good to trade. So when I'm like trading, I also have my own FTMO account. I'm like also trading Bitcoin, Ethereum when I'm trading. So XRP trades, I'm like trading on my own account, private account. So guys, if you have any more questions, just feel free to ask, because I have some time left. So it's also really cool to talk in English. Because I have to get used to it again. When I was in Palm Beach, I was like doing a team training for 300 persons. It was like going easily, but once you're like in Germany again, you're talking German every day, every time, and you don't have any connection to another country or to other people that aren't speaking the same language. Is like your language that you stick to is like, it's like getting rusted. So when I'm talking more English, it's like going more fluently. So it's also like a good practice for me, actually, because I think you maybe have seen you maybe noticed it, because like the last session it was like who, but for right now it's like really easy. But I can also go over through price chart right now if you want to.
Yeah,
So
sure.
for price trip, it's really important. We are trading with harmonics. So, and what's important for price trip is like you're gonna trap price. So what's important, I will show it to you. So one thing, I will also drop you can also look up the rules in the in Gold Cup, but I will also drop them into this chat, so you can also use them for yourself. So, oh man, I just translated them to German, but okay, we get for over it. So when we want to trade price trap, it's like with the harmonics together, we don't need these indicators over here. So just delete them. And we are working when we are doing a price trap, we are working in the 1 hour time frame. So we're using 1 hour time frame, and we are like trading it on the Forex market. So you have 2 price feeds. So we use AvaTrade for those trades right there. And what's important then is like we're gonna trap price, because price is always like, you know, accumulation distribution phase. It's like supply and demand. And for example, in those sideways moves, the price or the markets are building up volume. Yes. And what we are going to trade is like we're trapping the price and we're trading the breakout of it. So do we have a good setup over here? Yes, this should be a good setup. So for example, if you have a setup like this, you're gonna trap price. So you just draw 2 boxes. So 2 boxes, that's important. We have like the ceiling over here, and we have like the floor. So we draw a floor box and a ceiling box. I think this is clear. So floor and ceiling. So for example, this USD JPY trade is also a trade you can also look at right now. And what we are also going to focus on in the next part is like also for the break and the retest. So I will give you a quick example out of it. So I'm like doing it every day. So I'm also teaching it for the German team. So it's like pretty normal that I'm drawing this every time. And what's really important for now, when you want to start the trade, I just go over to Gold Cup to get the rules for the trades. So let me look at it. So we have price trap over here. I hope there's some setups. No signals for now. Perfect. All right. So I will just write down the German rules. So the price trap rules is like if you want to be at like 3% per trade, you like risking 0.01 lot each $100. So for example, if you like a $1,000 account, you'll have like 0.1 lot. And we are always doing a twin trade. So the stop loss is 30 pips no matter what. The first order for our account, the first take profit order is like 30 pips, and the second take profit order is like 60 pips, or like a trading stop profit, if whatever you want. So this should be really clear for now. And when you want to enter a trade, for example, I can go over through some setups that I did recently. Just let me look at it. Okay, now this was one of the trades I'm in right now, so I'm just like waiting for Euro JPY to come. Let me check if you have a trade opened, for example, because I'm like those are the setups I'm normally trading. Yeah, for example, it's like here. So when you want to trade something, then it's really important that you have one thing in mind. You need to have a confirmation candle in the 1 hour chart. For example, the confirmation candle means that the candle broke down or broke the zone with the body closing above or below the zone. So for example, if it just wicks down the zone, it's like not a really not a good it's not a breakout, it's like more a fake out. So for example, if you look at this candle over there, it's like a fake out. This candle over there is here a breakout. And for example, in my strategy, you can go in like break and retest. For example, yeah, like here you're like you have a break, you have a retest over there. You can go into the 50-minute chart, for example, like Cedric is also doing it like this. He's doing the trades actually based on the 50-minute chart, and also doing the entries there. For me, it's like a bit more complicated because I'm like, I need to look out for a setup. So I can show it to you. For example, we just had a good setup. We had the last weeks, we had some really good setups. Maybe I will find some of the setups right there. But if not, it's not that. Yeah, okay, I just found a setup that's really good. So for example, we just had a setup here on the 28th of March. So we just had the breakout candle, right? So first step is like identifying the breakout candle. We had the breakout candle just here. Afterwards, we just had a retest candle in the 1 hour chart, like the green candle. And afterwards, we just formed this bullish engulf, that's the bearish engulfing. After the bearish engulfing, we enter the trade normally. For example, this trade, yeah, we entered it after the close of this candle. Was like in this point, okay, it was just like take profit 1 trade. So in this point it was like 30 pips, and that's really easy because 30 pips are it's the probability for 30 pip moves is really high in the forex markets. That's why we are choosing the 30 pip take profit. And for example, right now you have seen it here. We have like the breakout candle, we have like the retest, and also the retest together with the bullish with the bearish engulfing. So if you have a look, and if you want to take a look at this engulfing candle, you can see that when you trade like the engulfings, perfect, it's crossing. Nice. All right, so then we are like waiting for the bearish engulfing. The bearish engulfing just means that we had the previous green candle followed by a red candle that closed below the green candle and is even bigger than the green candle. It's like engulfing the green candle, you know. I think this should be clear. And the next part is like the bullish engulfing is the opposite. It's like we're having a previous red candle followed by a green candle that is like going up over there. So this should be clear for now. And if you're like going through the markets, it's like it takes a bit of analysis. But once you know all the when you notice all the patterns, it's getting very easy. For example, with this strategy, I'm like overall like 90% win rate for the past 2 years almost. I'm like tracking down everything because I need to show it to corporate. So my results go to corporate directly. But just for now that you notice, it's important that you are aware of those things. Yes. Is it clear for now? So because it was like a short explanation right now, but I think we also have on YouTube some videos for pricer from Chris Derrick himself that he was going over through. All right. So are there some other questions left from you guys?
That was really, really good. Do you mind sending me that candle pattern?
I will send you the link for TradingView, bro.
Yes, that would be great.
I'm like sharing it, but in advance I will also do like a new rundown session for German team, but I also can make the PDF in English if you want to, because one of my goals is like also becoming an international educator.
Mm-hmm. You know, whenever you need help or anything, or you can send me the German stuff, I can translate it for sure. And you know, you're always welcome on our session if you want to practice on English. Like, you can
of course. So we can also do it. Like I can also like teach pricer for you guys. One thing we need to be aware of is like I have to be compliant in all sessions. It's like also if you're like talking to English speaking people or people from the US, you have to be even more compliant, because the compliance is in the US even over the top. In Germany it's like pretty cool. I can use my slang. I'm like talking and everything, but when I'm teaching trading or doing the education in English, I have to be really compliant. But I think this should be working. Yeah. All right. So I think I'm also looking forward to have another session with you guys. So I think this won't be the last session. So I think we will hear from each other. I think a lot more times. Where do you live? This would be also really interesting, because I'm going to do a tour in August when I will visit Los Angeles. After Los Angeles, I will go to Las Vegas. After Las Vegas, I will go to Arizona, and afterwards there's our Glendale convention. So I will like doing a tour, and I also want to see like international teams. And so if you're maybe in the near, we can also connect and we can also meet up.
Yeah. So I know Matt is from the West Coast. A lot of people are from Canada. We have some people from the East Coast, and some of them are from Europe. So we're mixed out everywhere. So I might join you on that tour, because I want to go to Glendale as well. and I want to see
Okay,
everybody
perfect.
on there.
Yeah, I'm just like I was like texting Maurice, and he was like, okay, let's do Las Vegas, Los Angeles, and all of that stuff. We're going to LA, we're going to LV, and yeah, I want to see the States again, because I was attending West Palm. It was like crazy over there. I saw like 4 cities. It was like West Palm, Miami, New Jersey, and New York. So in like 8 days. But for now, I want to take more time to be in the US, and also to get to know a lot of people. I'm also looking forward to see you guys. I think I would just hop off right now, and I wish you a very, very good day. It's like we have like 11 p.m. in Germany, so it's like 5 p.m. In your yeah, in
Yeah,
your
6 p.
time.
Yeah, it's 5 p.m. Eastern time and 2 p.m. Pacific time.
All right. Okay, that's great. Okay, have a nice day, guys. Thank you
for the
your
session,
time.
Cedric.
Thank you for your patience. One thing, some feedback for me, because that's important from like the people that are speaking English on a day-to-day basis, to just give me a feedback on how it was. And also maybe some improvements, because I want to improve, because in Barcelona there are like 10,000 people, and it's like, okay, I just want to be safe. I want to have the confidence to speak to the 10,000 people, because in German it's no problem. I was talking to several thousands. In English. Okay, perfect, bro. Looks like it's your first language. All right, so that's nice to know, because one thing you need to know, I just had my degree is an English degree. I didn't make it in German. I made an English degree actually in Germany. So, but for now, I'm like, you know what I mean? When I'm like speaking English, and I'm like, I have a pause of speaking English, speaking a lot of German, it's like coming into it. So it's like a routine, it's like a habit. But I think we'll make it happen. I will prepare even more for you guys. And I think, yeah, I'm looking forward for the next session. And I would say have a nice day. And yes, thank you, Chris, for the opportunity. Thank you, guys.
Thank you,
Bye-bye.
Cedric. Let's see some flames in the chat for Cedric here. That was crazy, guys. That was crazy. Let me stop the recording right there.